Welcome to the WeRCC podcast. Thank you, everyone, for joining us. This is episode 21. I'm Mr. Poppy. I'm filling in for Tom Crown, who is rumored to be at the NFT New York City party for the next few days. That should be a lot of fun. Can't wait to hear about it next week. I'm joined by the man Warren Buffett himself, crowned the Oracle of Ethereum, Oz. I just want to point out that joke works on multiple levels. Also joined this week by Jarrod from the Tezos community team. So Tezos was actually supposed to be doing an AMA this past week. We rescheduled that, but, talking to Jarrod, I said, hey, maybe you want to come and hang out with us on the next podcast. So here he is. Welcome, sir. Yeah, definitely. Always good to have some OGs. It's like when we have Mr. X on, and he's, he makes me look like a noob. So, and just a reminder, you want to download the older episodes, you can go to werccpodcast.buzzsprout.com. We were a little bit behind. Mr. X got a little bit busy. He's our resident audio guy. He got a little bit busy with some real life stuff. So we should be caught up now. If there's anything you're looking for that's not there, feel free to message me. All right. First topic is Bitcoin. Wow. I feel like every week we get on here, I have something new and just unprecedented to say about Bitcoin. So the last time we spoke, last Monday, price was around 22K. And the bulls were kind of stubbornly clinging to that 22K for a few days. And then came that massive red candle of doom on Thursday. So we dropped 12% that day. By Saturday night, extended that all the way down to 24% drop. And since then, we've recovered almost 20%. I think we're down a little bit, maybe around 15, 14% right now. What were you guys' feelings this weekend? It was, I remember waking up and I had a full day of driving Saturday. I had no time to look at charts. I just remember being like, man, this is not going to be a good weekend for crypto. Oh yeah. Yeah. I'm sure that there's people listening that think back to November. If we had considered just how correlated Bitcoin and crypto was to equities this cycle, especially later in the cycle, November really was that warning sign like, hey, the rate increases are coming. And we saw those first sell-offs, but hindsight, right? You've been around long enough. It's easy to be an expert in hindsight. And I see a lot of that, in Discord and Reddit, and, it's fun. Oh, yeah. And good catch, Oz, Jarrod. So for those on the Reddit side, if you heard a little bit of silence there, that was, Jarrod looks like he's muted there. And he just gave such a great speech.
It's beautiful.
Sorry about that. Yeah, I muted it because I've got my two microphones here and I can't mute the audio on the phone. So it's like right next to my microphone. So I hope I don't get some feedback from there when you guys speak.
No, you sound good. But I think long story short, what he was saying is, especially if you've been in the space for a little bit more than a minute, you've seen these volatile times and actually more volatility than this, although this is kind of like the slow, very painful 7 months, just slowly creeping down. There's been scarier times where the market cap wasn't as big, where you didn't have the adoption levels that you do now with nation states, with institutions, with big players like Saylor that are, hugely invested in the space and trying to push it forward. The future wasn't so certain back in 2013, 2015, the idea that Bitcoin and crypto may never actually make it was a lot more tangible, I think, back then. So, as scary as this is, just remind yourself that the billionaires, and there's quite a few of them, are now fully engaged in crypto and they're incentivized to not see it die, and it's not going to die.
Do you mind if I share something from my professional history before crypto? So my longest occupation has been as a poker dealer and working in casinos. And that whole time, like I want to sit in the chair where I know I'm making money as the poker dealer. Good day, bad day, I'm going to make a reasonable amount. Now, someone who's a great poker dealer, they can come in and perhaps, they may make, $2,000 in a day when I'm making 150 or 200, something like that. But on average, I'm doing fine and I'm happy with it. When I started trading in crypto and made the transition from like the casino world to the crypto world, I brought that knowledge over with me, where if I sit down at the table on a long enough timeline, these people, they live this life. And I'm talking about traders, I'm talking about poker players. I think the principles apply. Like on a long enough timeline, unless I put as much effort into trading as they do or becoming a poker player, they're going to take my money from me. Yes, someone can hop in and have a lucky day, but this is a skill and a discipline that plays out over time. And that's why I'm not saying that to discourage anyone from trading. I'm saying acknowledge that you're in a competition with others to do this. And there are going to be people who are really, really good at it. And just take that into account. If you're not the fish at the table, if you don't know who the fish at the table is, it's you. That's the poker motto.
Yeah, true of a lot of things, right? If you're not paying for it too, if you're the product.
Yes, yeah, amen. And sorry, I know, I imagine some people have had like some really stressful experiences with trading and learning the hard way. So I don't want to take that lightly at all. But in retrospect, from where I came from and like getting into crypto and stuff, the years I've been here and watching the cycles, there were a lot of projects that got a lot of play that were obvious stay the hell away situations, and I don't mean that, again, not trying to put anyone down or dismiss, the hard learning pains there, but that there are some big principles to pick up on to avoid getting in those situations again. And I really, really hope the crypto market matures a lot and doesn't drive up these projects that end up basically doing a lot of damage.
Yeah, speaking of damage, we're gonna get back to to Luna and everything. So much of this part of the cycle goes back to what happened with Luna. It's just, oh man, it's really going to be one of those pivotal, historic, and perhaps notorious moments from the cycle. But let's circle back just a little bit to Bitcoin. I know this is the part that people both want to hear about and they kind of want to move on, because I know boomer coin is kind of boring, but also it's the backbone of this space, and it's important to know. So, what really triggered this kind of violent downside movement? We really were consolidating for a while. Things seemed like maybe the market was going to be steadying a little bit, and then just boom, we got slapped down this past week. And I would say, and I'm interested to know what, Oz, Jarrod, what you guys think, but I really think that the biggest driver here was the contagion, the systemic issues that originated in that Luna meltdown. That was a $40 billion market position that just basically liquidated within, a few days. And you had these massive funds like 3AC, who at one point had, I think, upwards of almost $20 billion in the market, that had outsized positions in Luna that ended up getting hit pretty hard by that. And then from there, it just kind of cascades. It's not going to happen overnight. It's going to take weeks to kind of flush out that, that I wouldn't say bad money, but, the effects of that, to feel the effects of that.
Yeah.
What do you guys think? I mean, was it, does it all go back to Luna, or is there something more, something bigger at play besides the macro, of course?
I think Luna was a good wake-up call for a lot of the market, because what you'll notice with a lot of these funds is they were incredibly over-leveraged, like Celsius, 3AC. They were kind of over-leveraged, and once they started losing money on Luna, especially 3AC, I think they lost something like $600 million there, which is not a small sum for anybody, even hedge funds. I mean, that kind of acted like a wake-up call for them. So they're kind of starting to realize just how much damage these kind of things can do to them. And I don't think they were really prepared for what was going to happen either. And that's why they were so leveraged into it, because they were expecting a bull run. So I think it was just the Luna crisis mixed with a bit of bad planning there. And it's going to send shockwaves through pretty much anybody that had a footing in the crypto space.
Yeah. Well, and no matter what, okay, so like the theory here is, let's say Luna was expecting a bull run, and so they allow themselves to get over leveraged. It's like someone has to make that decision in such a way. And but this is like gets back to the point I was making earlier. There's probably going to be someone smarter at the table. And when you try to thread that needle, they're going to say, oh, you're making this move. Cool. Well, we're going to do this, this, and this in the geopolitical financial market. And we just have to let it last long enough for you to get crushed. So like whatever happens in crypto, it's happening. Like whatever shady stuff may or may not happen in crypto, it's worse in fiat, and TradFi land. And so that's one of those aspects for me where it's like they took too much of a risk. They took too much of a gamble, and these are the consequences. And for a lot of these people involved, like, well, how did these people come across controlling billions and billions and billions of dollars of wealth? Like, that's going to change you psychologically. Could you imagine waking up tomorrow and controlling like nation state levels of wealth and like how that might change your personality? It's like these people that end up controlling this much wealth, they didn't like go through the hard, long process of getting that wealth. It happened from this new phenomenon we're in. And I'm sorry if I'm getting off into like the abstract tangent stuff too much. Well,
it hasn't really changed me yet. I mean, the first billion maybe, but ever since then, I think I'm actually a pretty accessible, down to earth kind of guy.
Fair.
We're talking about bananas, right? Bananas. Maybe.
Of course.
So you do bring up a good point, though. The over leverage was one of these themes we've heard about a lot during this cycle, and it's never been more accessible. And it's kind of a contentious point. In certain countries like the United States, leverage trading is heavily regulated and nearly inaccessible to your average retail trader. But that's not so true in other countries. And it's also not true to people in the U.S. who know how to use a VPN, which takes about 5 seconds to set up. Besides that, also, a lot of the institutional investors are relying heavily on leverage, because when you have that much capital to draw on, you can take some pretty creative positions. You can hedge your other investments. You can do really fun stuff when you have 7+ digits of, funding to play with. But when you have these really extreme market moves, it starts to, it makes all of those types of positions a lot riskier, because it only takes one or two of those really big leverage positions to liquidate, to just tank the market. And I think that's really what, at the end of the day, I think that's what we saw this past week, was those kind of really massive positions liquidating, either forced liquidation or they saw it coming and they just quickly moved to market. They closed out their positions and sold what they had to, kind of a combination of things. But in my opinion, the retail capitulation's been done with. At this point, it's whale versus whale versus institution, so on and so forth. And we're just, stuck in between them all.
We're along for the ride.
We really are. Yeah. It's, what do they call it? PvP. It's now PvP market. So you're watching, the big funds fighting each other for the mud. There's a lot less capital to profit from now. So they're fighting each other for it. So this is going to be the question, though, is this an investment opportunity where we are now? And of course, nothing we say on here is financial advice, but let me highlight a few of the data points. And I saw a really good post on Reddit that did something similar. So first thing, inflow, meaning people moving Bitcoin to exchanges to Zelle. That's at levels we last saw during the COVID crash or 2018 peak bear. Another popular metric, market value by realized value. This shows the average profitability of the supply in circulation. So historically, we are at an optimal accumulation range. Pure multiple. This shows miner profitability because miners have to pay for their equipment. They have to pay for electricity and certain things. They're both very smart investors because they have to be profitable, but also sometimes their hands are forced, right? At a certain price point, they're more concerned about just keeping things running, or maybe it's not profitable enough to keep things running. So the Pure multiple showing their profitability is currently at a range that historically provides an outsized return. RSI, grossly oversold. Fear index, record lows. Supply trends showing massive accumulation. All of this traditionally would say, hey, this is the time to go in. This is the time to start buying. However, the macro picture remains unchanged. So, Russia, inflation, oil, supply chain constraints, these are squeezing the economy. So what do you guys think? Is this we're kind of at a point, it's almost like a weird inflection point for crypto where it's battling between its historical trend and the macro picture. And I kind of am inclined to say the macro is going to win this round.
Now I've been out of the trading game for a while and I'm kind of ignorant to some of these. Would you mind covering real quick what the macro is?
Oh, just the macroeconomics, the inflation, the war, the war with Russia leading to, oil and supply chain constraints, those kind of things.
Yep. So I just, Oz, unless you want to jump in on that, from my perspective, I think it's, God, I don't know what's going to happen, but I have buddies that are big into like their Bitcoin maxis based on like it's a hard money, and we know that argument, and looking at this macro from that perspective play out, saying that the way things should go here in the short term, and of course who knows, is that we could see deflation in the short term before that rapid inflation, and they're still very bullish, expecting like a big Bitcoin. And of course, historically, we see like Bitcoin pumps, the rest of the market follows, kind of situation. And for someone like myself, like I fully believe in the incompetency of governments or involuntary governments, and in which in the long run would bring value back to crypto, as a whole and in general. What will I'd have a hard time saying what I think will happen, but I could absolutely see that being the case. That as much as we see, we're going to see we're in for interesting economic hard times. It seems like the larger, more competent players in the world are also gearing up for that. You see big institutions pulling back and cutting back and getting ready for hard times, which, people have been kind of predicting for a while now. So it would make sense to me that the value proposition of crypto in general goes up based on that, because now you can come to the market and say, look, these people have been controlling the strings to the economy, and this is the world they gave us. It's time to try something else, and this is an option. Does that make sense? That's
the future. That's the inevitability that I think most of us are looking for, right? We talk about it a lot here. If Mr. was here, he would be talking about financial sovereignty and going back to kind of Satoshi's vision of the central banks.
Where's Satoshi's vision?
Yeah, I mean the banks, the central banks, the governments, they're not going to take care of you as well as you could take care of yourself. Which
even if they were good actors, like just based on the price problem, even if they weren't sociopathic, sorry, I'm going to go off on a tangent. Even if they weren't bad actors and they wanted to do good, they couldn't. No one can centrally manage an economy, and oceans of blood and destruction have followed when that's been tried.
True. So finally, almost to the end of this Bitcoin section, let's talk about what you should be looking for, in our opinion. What should you be looking for that may give you a sign that there's going to be a proper recovery, a path to recovery. I'm of the opinion that we're near. I don't know that we're quite at the bottom, but we're in the range of the bottom. uh, you're going to be looking for things like the inflation showing some relief from the highs that it's at. Clearly, that wasn't the case. The last, consumer price index report came in. It showed that inflation was up month over month, and in turn, the Fed raised the rates more than they initially expected to. I think that trend's going to continue into next month. I'd be surprised if we didn't have another 75 basis point rate increase. You're also going to want to look for the Fed's willingness to relax on those rate increases. So it's one thing if we say, hey, the inflation is starting to show some signs of recovery. It's starting to drop a little bit. We want it to drop enough to where they feel comfortable enough to come out and say, hey, we're starting to see some real progress. We want to, we expect the next rate increase to be, 0.25 or maybe 0.5. And then you're going to want to see the US dollar index. You want to see the dollar starting to lose its strength because the crypto market is so strongly correlated to the dollar inversely, right? The dollar strong, Bitcoin generally loses its strength. And so for the dollar to lose strength, the most likely opportunity for that to happen is that the European Central Bank needs to take a more aggressive stance on its own currency, the euro, which right now is at virtually zero, 0% rates.
Yeah, the euro has been really weak the last few months, and so has the Japanese yen. So it's pretty much just opened up a perfect opportunity for the dollar to kind of take reign, and it's kind of what it's been doing recently.
Yeah, how's the pound doing, Oz? I don't even look at the Queen's currency. I assume it's doing okay.
Oh, the pound is not doing too great actually. I don't know the exact conversion rate, but I know I can get a lot less dollars than I used to be able to.
Yeah. I was well, let me see. I'm just looking at my notes. Okay. So one interesting thing to note about this cycle, this is completely new. So normally when you were in these downtrends historically, right, Bitcoin would gain dominance or gain market share. And we talked about this last time. Instead, that market share has overwhelmingly been going to stable coins. And if you look at the three big ones, which would be USDC, DAI, and USDT, or at least to me, those are the three, maybe not the three biggest, but the three main ones that I trust. So anyways, they have gained since 11th of June, so maybe a week and a half. Mm-hmm. They've gained they've gone up 44%. In that same time frame, Bitcoin's dominance has dropped almost 10%. Ethereum's has dropped 8%. So this is a whole new dynamic. Now, people didn't cash that out, right? If it's sitting in stables, that implies that they have it waiting there, not cashed out, because they're going to redeploy those funds. They're going to buy something when they feel comfortable buying, which means that right now 15 to 16% of the market is sitting there on the sidelines. 15 to 16% of all the money in crypto is waiting to come back in and buy something. And I would expect the majority of that is going to be Bitcoin. So food for thought. You guys, I'm still probably 80% in stables. I don't know the exact ratio, but I'm mostly in stables. Are you guys, what have you guys been doing recently? Have you been?
Pappy? I'm still quite heavily in coins. I DCA'd very hard around the 1.9 to 1.5 region on ETH because I wanted to pick up some other side land and other NFTs, which I thought would be a good idea, and hasn't played out too well. But I've got a decent strategy now where I just DCA with my yield from some of my DeFi projects. So I'm
nice.
still accumulating a little bit.
Yeah. I am wishing I had cared more about trading about 6 months ago. That's what I'm doing, because I hodl all the way down, I hodl all the way up, and I've been doing that for several years in large part. And it's like, cool, I'm doing fine. But if I had put a little bit more effort into like trying to trade, I could be in a much better position. And again, like I had people months ago, like, yeah, this is probably going to happen. This is probably going to happen. You should do this, this, and this. And if I had just half taken that advice, I'd be a lot more comfortable.
It's just the typical cycle. cycle opportunity. You're never going to nail. You're never going to time the market, right? It's all about just being there and being available for the opportunity when you are present. And
Precisely.
Yeah. Well, our favorite thing to say, you're not going to time in the market is better than timing the market.
That's very, very wise. Like when I was talking about like knowing where you're at, if you're competing in poker, if you're competing in a marketplace, so there's going to be that person or team of people out there who they know how to time the market way better than I do. And if I try to make the 10% swing that they're going to make, they're going to eat my lunch. But if I'm humble and take like a 5, I can still be doing pretty sweet, you know?
Mm-hmm. Yeah. And, you made me think Oz other side. So I've been waiting to get that other side. I really do want to get one. I'm a big fan of Metaverse. And I've been waiting. So when other side launched for the first couple of weeks, its average sale price was 10 ETH. And you got to keep in mind, the price of ETH was a lot higher too. Right now, the average price for another side is like 4 ETH, and the floor is like 2.4. So for those who are thinking about getting in, I mean, this is pretty good. What is that, like $2,500 for another side?
Yeah, it's quite cheap now. But if you want a decent plot, you're still going to be looking around 4 ETH. The floor price is for like, the scraps of the scraps of the land. They're very, very awful.
The scraps. Oz doesn't trade scraps. I want everyone to know.
We go for the real meat of the land. We got a nice land there. We got a decent plot actually. It took a lot of debating, but managed to get a nice one.
But the queen's what are we talking about? She has the official NFTs coming out, right? The treasury.
Queen? Oh yeah, the mint. Yeah, Rishi Sunak said he's going to do something about that. I haven't really looked into that enough though. I don't know if that's still going ahead. But
I was going to say
Sunak
maybe
is fairly pro crypto and NFTs, so I don't doubt that will be coming out sometime this year.
I've heard, besides the church, that the queen or the royal family is one of the largest landowners in the world. So, why not extend that into the metaverse, man?
Yeah,
maybe you should drop her
metaverse.
Drop her a line. Just say, hey. You could even donate your land. In fact, I feel like as one of her, loyal servants, that you should donate your other side to the queen. I mean, for her Diamond Jubilee, right?
Yeah, it's a little gift.
Man,
pay her back for all the things she does to the country.
That's the least you could do. That's the least. I'm gonna contact them. Harry's over here in the U.S. I'll contact him and we'll work it out, man.
Gentleman, what a fellow. Knighthood coming soon.
that would actually be really cool. I could see that maybe in the next generation. Queen Kate will knight you in the metaverse. So speaking of NFTs, it's NFT New York week. And if anyone's there to take pictures, please do let us know how it goes. Would love to hear more about it. I thought about trying to sneak up there myself, but I just don't have time. Now, looking at the market conditions and the current ETH price, my only concern is I'm not sure New York City's ready for all these new homeless people to show up this week. But actually, no, sorry. Yeah. But I did see a funny comment, and this one really hit home. If I was a Bored Ape owner, and I'm not shading them, I love my Bored Apes, but someone's post was along the lines of, "Hey, daddy, sorry kids, we could have paid off the mortgage and paid for your university education in full, but I really wanted the intellectual property rights and a cool hoodie of my monkey picture."
Oof, that brings up a good point.
Cold reality of NFTs.
Yeah,
that was a burn.
Flush, yes, don't forget to take spend some of that, and because you'll feel a lot better during moments like this.
Yeah, I'll spend some of my $200 I've made in NFTs.
I've bought 2 very humble pieces of property and a humble vehicle or 2, and at the time when I'm doing it, I'm this is just so if everything goes to hell, I could be like, well, at least I got that,
Mm-hmm. You should. That's the hardest thing for traders to learn. Absolute hardest thing is taking profit, because when things are going up and things are green and you feel good, you feel like the moon's the next destination. I mean, it's like a chemical imbalance in your brain that's making you be stupid at that point.
Dude, so 2016, you know how nuts that, or maybe you don't, I'm sorry. 2016 was an easy market to trade it. You buy any ICO and within a week you can flip that sucker and double your money. And it is a money machine. And I remember like being on my break from working, like dealing poker and then like just trading casually. And it was, I don't think that time's ever coming back, but oh man, it was nice. At one point I had like 81 Bitcoin. Like that's what my portfolio is worth. And God knows, like I said, I'm not a trader and I gave so much of that back over time. But when you've got that sitting there, boy, that will mess with your mind. I swear to you.
Oh yeah. That was my first big trade in crypto. I doubled my money that week by just doing really stupid things, and I thought I was untouchable. I really did, and I lost all of that and then some. So I went from having doubled my port to maybe 3 weeks later having lost money, and it was so frustrating because I remember like the kind of things you would think, which is like, I don't know why every time I go to enter a trade, it goes down. And every time I sell, it goes back up. Right. Yep. That's when you know that you need to stop. If you say those things or think those things, you need to stop and you need to study a little bit, even just a little bit, understand the charts a little bit better, understand what's going on in the news a little bit better, because that's a very common sentiment from new traders. But that was painful education that everyone needs,
Yep.
Yeah, you can't grow without that painful reminder. And I think every trader that has sticked with the markets for multiple years, they can tell you at least one story where they got hurt massively, but they'll never make this mistake again. Or at least, hopefully not. Hopefully they learn from it. And that's just the trader's bell curve. When you first start, and you start winning, you think you're a genius and, you think you're untouchable, like Pappy said. But then you get the harsh reminder and then you get the wins over time.
Yeah.
So it's
slow and
time
steady
in the market, sticking with it that helps.
Yeah.
And managing risk. So let's talk about Celsius, guys. I know Tom's not here. He's the one of us that had the position in Celsius. I didn't get a chance to ask him how that's doing this week. But from what I understand, it's not a lot's changed since we talked about this last week. What has changed is some of these rumors coming out that certain big players in the space, potentially like FTX and Sam, the founder of FTX, and some other big players, may be trying to crush Celsius or short it into oblivion or do whatever vindictive thing they're trying to do, or maybe aggressive takeover. I don't really know what their agenda is. I just know that that's the prevailing conspiracy theory. I don't know how provable it is. But have you guys seen the chart this week? Because this has been absolutely wild to see. So Celsius has their own token, CEO. And from what I saw in the FTX chart on TradingView, I know that there was a short squeeze on it because the community started to kind of get together and rally and say, hey, if someone's trying to crush it and all of our funds are stuck on there, let's squeeze it. Let's do like GameStop. Let's do a short squeeze on the Cell token and get those short sellers out of there. And so according to the chart, that price has ranged from 9 cents up to $2.50, which would have been an increase if you had landed that peak bottom and top 2,700% in a 2-day period.
Crazy.
How insane is that? That's insane. That's so.
Do you know it's
currently. No, I'd have to look. You're welcome to peek at that while we're sitting here. But yeah, so it's currently at like 85 cents, which is where it was basically before all this drama started. I don't know if that means it's in a better spot now. I think I've seen some other discussions where Celsius is trying to get creative to get more funding or to trade into more revenue to, or more profits to try to get to a point where they're liquid enough to unlock, because they know as soon as they open the floodgates that people are just going to, rush out the door. But Here's your chance to make $20 million. If anyone can present any evidence, any verifiable evidence of the basically the short selling, the purposeful, secretive crushing of Celsius. If you can offer any of that up, there's a popular Twitter account, Plan C. He had the information on his Twitter. So $20 million.
Interesting.
Nice bounty.
Yeah. I did notice, I'm not saying any of this is true, but I did notice that maybe an hour or two, or maybe a little bit later, but not too long after Plan C had posted about this, Sam had posted up, there's a couple new posts in Twitter about how generous FTX is and how they're there to help save the market, and how gracious they are, which seems to be an ongoing thing for him, right? I'm not slighting the guy. He probably does do a lot of good, but that doesn't mean in the back end that he's not manipulating markets or something.
Mm-hmm. Mm-hmm.
Such an unregulated space.
Well, that's the thing. That's what kills me is like the regulators are worse. Like the regulated space is worse. That's what I'm talking. Like whatever is bad about crypto, it's worse in the fiat world. And if they can, and they've got the interest to extract the wealth from the people that hold crypto, but who are naive of these financial schemes, there's an interest for them in getting your crypto or getting your wealth one way or another. And it's like, don't let them have it by getting involved in the sketchy deals.
Yeah. I always think, the institutions, the banks, the people that are manipulating traditional markets have had decades upon decades to get, entrenched, to lobby for favorable policy regulation, to, just to get their hooks into everything. But crypto's new enough. You have that. You definitely have that now, but it's not nearly as entrenched. And you also have some of the, I always like to think in my head that maybe like the crypto native whales, the random OGs in the space are like our defense against that, because some of them have some pretty spicy holdings as well.
That's true. There is an interesting aspect which does get ultra spicy, I might add, of the proposition that crypto brings to the table. And yeah, I think that's very valid. But this cabal, let's say, with as much conspiratorial angst as possible, they've got centuries of getting good at this. And I don't mean that like a literally like conspiracy theorist. It's like an open conspiracy kind of thing. Like they've had centuries to get really good at this game. And even like good actors in some way of saying, okay, cool, let's experiment with this kind of financial structure over the centuries. And this has been going on for a very long time. And they know not to try that. Like, don't trust this kind of structure or organization. And now what we're seeing is that you have people that haven't had access to play this kind of game, to trade this freely on the marketplace. Like I remember like how heady it was to back in 2013. I was trading on a website I'm sure nobody's ever heard of called cryptostocks.com. I lost probably a Bitcoin or two just like loaning it out to people and learning the hard way that they're full of it. And, they don't have to give me my money back or do anything that they say they will, And so basically a lot of people in the marketplace are learning the hard way that some of these financial structures and schemes and setups cannot work or like really shouldn't be trusted, Yeah.
And the nice thing is that a lot of those kinds of services, each cycle get more and more mature.
I absolutely agree. Yeah.
We had a note in here about a lot of the issues that we're seeing right now are coming from centralized financial services like Celsius, for example, like 3AC as a hedge fund. But you have some of these OG DeFi protocols that have been battle tested, that have been through their cycles, taken their licks and learned from them. Stuff like MakerDAO that manages DAI, the stablecoin. Stuff like Aave, AAVE, the largest DeFi protocol in terms of TVL. Those guys are doing fine. They're holding up. They're surviving this market. They're not crashing and burning like a lot of these other ones. And I think that's kind of an interesting twist, given how doom and gloom crypto feels right now, given how shaky the macro picture is. Yet, for the first time this cycle, we're seeing DeFi protocols hold up better than a lot of the institutional, I guess, partners that do a lot of the same stuff.
Mm-hmm.
So,
mm-hmm. Let me ask you a question. I'm curious. 6 months ago, maybe 9 or a year ago, what would DAI have been giving on some kind of a return if you were participating in that?
Oh gosh, I'd have to go look that up. But I will say that's when you're looking at kind of that base layer of yield farming for stables, it's always a little bit lower than what you would see for stuff like Nexo. I think when last time I looked was like a week ago, and Nexo, which is CeFi, which is centralized finance, offered generally the highest rates, around 20, I think like high teens to 20%.
Okay, so this is the point I'm getting at. Like, let's compare those battle-tested structures that are offering, like, let's say, I don't know, let's say, for example, DAI was offering 5, 6, 7%. And now you compare it to a centralized structure, even if they call themselves decentralized, that's offering like 20%. There's your red flag, you know?
Mm-hmm. Absolutely. Yeah. I think we've tried to reinforce that before, but what you should always do is go and, if you're not sure, just go and look. You can Google the returns from common stablecoins and common protocols, and you're going to find that the biggest and the most trusted ones usually have a little bit lower rates than the new sexy, shiny ones like Luna, like Tron's USDD. You're not going to find that same kind of rate on some of the older guys like Yearn or like Maker, or like Aave.
Yeah. Well, and what I've done is I've put some of my Bitcoin into like blockchain.com. They offer a percentage rate on that. And I think now it keeps going down. I think it's down to like 3 or 3.5 or 4%. I'm like, okay, this is a very professional institution that's been in Bitcoin since day one, been in crypto since day one. And in order for them to pay me that, they've got to go around and loan that out and make a higher interest rate. That's the way it works. And that's about the best they can do, And to get back to the point you were making earlier about like stable coins, like I know for myself, I was very interested in holding USDC for a little bit because I could get 13.5% on that with blockchain. And it's like, okay, so like blockchain, yes, centralized, but it's also got a really good reputation, been around for a long time. So I felt a lot safer doing that. Oh gosh, what point was I making?
I'm not sure, but I'll tell you the number one thing to think about when you're playing with stable coins is that in the US, the average return, maybe I mentioned this last week, I'm not sure, but the average return on a savings account in the US per bankrate.com was 0.07%. So not even 0.1%, less than 0.1, less than 0.1%. So if you can beat that, you're already doing good, right? Now, if you can get a few percent, to me, a few percent's already good. It'd be ideal if we could outpace inflation. And I think you can probably find 6, 7, 8% right now. I would probably feel fine. Even depending on the protocol, I might even go a little higher. But you start getting to like over 20%, you're playing a dangerous game right there. Yep. I don't know. I don't care what you're doing. It's probably a high risk proposition. And just because it's a stable coin doesn't mean it's safe.
Absolutely. Well, and like you got to ask yourself again, like in order for them to pay you 22% or whatever, like they've got to go and make 25, 30% on some kind of event. That's a difficult thing to do. You've got to identify who in the marketplace has the capacity, who can bring this much value to the marketplace, who hasn't been realized by others in the marketplace. That's a difficult thing to do, to select who the winners and losers are that way, or to predict who they are and be right in the long run. However, as time proves on, it's easy to convince people that you have that capacity and don't actually follow through over time.
Yeah. Oh, well, marketing. If anything, if there's anything that's highly successful in crypto, it's marketing.
Yeah. Yeah.
The next time I see a protocol advertised in Times Square, to me, that's a selling sign right there. You better cash out. I feel like so many projects peaked in Times Square. So let's talk about Solana, or Solano, as some people like to call it. Specifically, a protocol in Solana called Solan that is setting an incredible and kind of frightening precedent. So we talk about decentralized finance, and in essence, in simple terms, how decentralized finance will work is you'll have a DAO, a decentralized autonomous organization, and there's many ways to formulate this, from like trying to fully automate it to where the smart contract does all the work, to having manual intervention, to having more human centric management of the DAO. So there's many ways to do it, but at the end of the day, the intent there is to decentralize the voting power, the decision making on some level, so that individual investors, whales, project team, everyone can kind of come together and has a common incentive to guide that project successfully. This is different from, say, a corporate structure where pretty much everyone listening to this knows what a corporate structure is. You have managers, directors, presidents, CEO, and they kind of have that top-down structure, and they manage things that way, right? And so you, as an individual employee, generally don't have much say. So the intent of a DAO is really pure, and it really does play well into, again, Satoshi's vision, and then empowering the individual investor to manage their own financial sovereignty, right? But on Solend, so there's one whale that has this huge leverage position. And I want to thank Tromix1 on Reddit for this really easy breakdown. So there's one whale that has a leverage position worth more than the entire liquidity of the Solend platform, with the entirety of the collateral being Sol tokens. In the event of him getting liquidated and he was getting dangerously, or she was getting dangerously close, Solend would basically be defunct, and that Solana would basically be dumped onto the market and would lead to some intense volatility. And we know Solana has a tendency to go offline very easily, so it could bring it offline, right? So anyways, Solend, in an attempt to avoid this all happening and to avoid becoming a liquid and shutting down, basically, they had put a vote up to seize that user's funds and sell them. But the way they did this, they did it, late at night when when North America was asleep. They only had the voting open for 6 hours, and they also made sure to have some whales on hand that could help tilt the vote yes. They got 80% of the vote yes. Now, here's the precedent that this sets, though. This is taking an individual's investment and taking it over and doing what they want with it. Who's to say that now that they've done this, that they wouldn't just go in and just take his money? They could, if this is possible.
Well, okay. Like kind of devil's advocate for a couple different perspectives here, because the easy thing is for me to like pile on and this is horrible, and I think like at face value it absolutely is. So I don't know all the details, I don't know everything going on, but part of me is like, look, anyone could have looked at the structure of these DAOs and these things and how they work and figured out that this hole was there. Why did they invest in it in the first place?
The DAO is very, very new. The DAO was only created, I think, a few weeks ago, or even just a week ago, and this was their first vote. Okay, so the DAO, but then this DAO has some measure of like protocol control. Like it can mess with people's balances and things like that. So that capacity had to be in the chain to begin with, correct?
Yeah, so that means that their contract has the ability to seize these individual investors' funds and do whatever they want with them, I guess.
So it's and yeah, I think that's, again, I'll take it the story for face value, everything going on here. That's pretty shady, and like I don't get it. I don't like why do people hop into these things that they can work that way? And maybe it's that they weren't doing this, and then a couple weeks ago they just injected this new, we're gonna try put this down and things like that. if the market doesn't respond and stop, pull some investment out, they're like, okay, cool, everyone's cool with this, because the ultimate vote is going to be whether you've got dollars in it or not, or whether you've got value held into the project or not. So for a lot of these situations, it's like, well, the writing's been on the wall. Why do people keep supporting it?
Mm-hmm.
And yeah, this is, again, taking it as face value. I don't know all the details, but if this is the case, this is what's going on. Good God, no, that's not the way crypto's supposed to operate.
Yeah. There's a lot we probably don't know here, and I'm certainly not an expert on Solana or Solend. I have taken part in spearheading the publishing of DeFi protocols bylaws before, and it is actually quite complicated to think through all of these different scenarios.
Yes.
And to try to account for bad actors, both on checks and balances, just like any government, right? You always got to be concerned, like, what if someone on the project team or dev team goes rogue? What if a member of your DAO council, if you have one, or your community, what if a rogue whale? It's really, really difficult. And so I'm sure that there's some loopholes here that maybe they're going to want to think about shoring up in their bylaws. But this is just, at the end of the day, regardless of the context, why they're doing it, I think it's a bad precedent. It would be like the bank. Even banks don't really do this. I mean, I guess the government can seize your funds without your permission, right? But this is like the bank going in there and saying, well, I think this guy's making bad investments in his, like, whatever, in his stock market. I'm gonna take over his account and do what I want with it.
I think depending on the account in the bank, like, there's situations where they can kind of do that stuff, but it's usually something you've agreed to. Like, hey, we're going to give you this loan. If you're stupid with it, we're taking it away from you.
Sure, yeah, that's true. But that's also, that's something you've agreed to. That's something that is kind of codified in laws and regulations.
Well, and so this is where I'm like, and this is with, like, the market's going to mature. People are going to get better at this, unfortunately, through bitter experience. But it's like, well, when these DAOs don't have these things thought of ahead of time, like, you've kind of implicitly agreed to it. They're like, and so to be more skeptical of that, like, I love DAOs. Personally, I think DAOs are the next big, like, crypto 3-letter word, like, it was, what was it? 2016, it was tokens, and then it was DeFi for the spell in between there. And this last cycle, it's been NFTs. Personally, I think DAOs are the next big thing, but we are brand new babies at controlling this kind of technology and coming up with it. And we're going to have a lot of skinned knees figuring it out. So just be wise and please take that into account.
Mm-hmm. Yeah. I'm a big fan of DeFi and DAOs. I'm excited to see where they go in the next cycle. So stable coins, we should have moved this up. We talked about stable coins earlier. We had a note in here just to talk about where some popular stable coins are at right now. So at the time of this writing, I'm not looking at a live chart, so this would have been a few hours ago. Tron's USDD was 4% depegged, so 4% under $1. It's been on a slow, persistent downtrend for the past week. But I think our advice, unless you guys disagree, I think my advice is just get out of it. It's not worth the risk right now, given how things have been going. I think if anyone can keep it or can repeg it, it's Justin Sun. But given that it's been about a week and it hasn't repegged, I would start to be concerned. And so you still have time. It's still only a 4% depegging. I mean, it's up to you, right? If it goes back to $1 tomorrow, don't come and yell to Poppy, but just food for thought. I don't want to see more people, end up victims like Luna if we could avoid it. Tether, I know there's a lot of FUD. There's a lot of concern. Tether's honestly holding up pretty well. It's seen some volatility and it has dipped at times, between 1 and 2 cents, and it always bounces back up. It's supposedly fully collateralized, and today, I don't know if you guys saw, they've been so resistant to this in the past. They committed to they called it top 12. I don't know if it's top 12. I guess it must be number 12. Full audit of their collateral. So looking forward to that, because right now Tether is losing a ton of market share to USDC. USDC right now, everyone's kind of looking at as the most trusted stable coin, probably because it's based out of the US and it has a lot of regulatory oversight that it can't escape. So it's kind of forced to play by the rules. Mm-hmm. And then Magic Internet Money For those who don't know, that's what it's called. I kind of always hate that name, but it's funny. MIM is currently depegged by 3%. It's a lot of volatility, over $1, back down to under $1. It's at 97 cents as of the time of this writing. So food for thought. If you're in some of those, you may want to rethink it. But you as a OG, you probably give a lot of credence, a lot of respect to Bitcoin. And we talked about this earlier, but a lot of people have been ditching the Bitcoin this cycle during the bear for stable coins. I'm curious to see how quickly that reverses. When you start to see that reverse is probably a big buy signal for me.
Yeah. And one of the arguments I can see for ditching Bitcoin and hopping into a stable for the time being is like if I believe the market's going to go down, of course I'm a long-term holder. I think it's going to go back up. It's like it's easy money to hop over, get my 10% interest on a stable coin while Bitcoin's tanking, and then pick up cheap crypto. Whatever it is that I'm interested in. So to me,
what would have been the baller play would have been a really good play is like end of 2021. If you're European, you moved into US dollar stables, and then the dollar just went on that crazy rally. And then about now, sell the dollar stables back into euro stables, which by the way, USDC Circle just announced they're going to launch a stable euro. So move it back over, because I think we're going to start to see the euro rally hopefully later, the next month or two as they raise rates over there.
Do you mind if I do the smallest shill of Tezos at the moment?
Well, yeah, we don't chill, but I'm curious.
I'm not by any means. So it is relevant to the convo, and I'm not telling anyone what to do with their money. It's to inform people, like there is a euro stable on the project.
Okay. Yep. No, that's fair. Yeah. I've actually only seen euros in my experience. I don't usually go looking for them, but I know I saw them on Kraken.
Yeah. Yep.
I could trade in and out of euros if you want to do, a little baby Forex. Which I think a lot of
Forex to crypto. That's interesting.
What's that?
Well, they brought Forex to crypto. It's quite cool.
Yeah, well, a lot of crypto traders, if they leave, like for example, if this bear market's too much for them, a lot of people go to Forex. I think it's the most comparable to crypto.
Forex is fun.
Stocks, man, I just can't do stock market. It's so boring and slow. If I buy stock, it's like I'll hold it for the next 30 years because I just don't care to log back in.
That's the world I've been in. Like I'll get a little more interested when they're like backed by a token. And it's essentially just a wrapped crypto.
Oh, yeah. Well, and that's out there. They do have the tokenized equities. You can buy. I gotta find a link. I was just talking to someone about that this past week, actually. But that's kind of cool.
Someone that just like a general trading kind of relevant thing. If you're not familiar with who Bruce Fenton is in the ecosystem, in the space, in my opinion, he's a great guy to follow for information. And I say this from personal experience because just when COVID was coming about, I follow him on Twitter. I've been following him for years. And if you're not familiar, he was part of the Bitcoin Foundation a long time ago, and then it dissolved, to stay more decentralized. But he is, I think he had 20 years in the traditional stock market, like on Wall Street, but he's been super crypto since it's been around. Awesome guy, really helpful in the space. And when COVID came around, he was saying like, look, I know it sounds nuts, but this is one of those weird times where you want to hold dollars. And this was, I want to say February, like fact check me here. It was roughly February of 2020. And I listened to him. I took that moment and I sold Bitcoin just before it took that deep dive. And I was quite satisfied with that decision.
No, that's good. If, anything like that, we can post into the subreddit page for the chat for this call. If you have someone cool that's, think is worth following on Twitter.
Absolutely.
I always say Reddit and Twitter. You gotta keep tabs on them, and you gotta watch, especially on Twitter. There is a lot of respectable traders that aren't just degens, that aren't just, whatever, like passive aggressive whales that actually give good data, good information about the market. So Yeah, definitely share the goods there. So we got one more topic, and then we'll move into the Q&A. This is about Ethereum. So really, this is to pose a question: why is Ethereum valuable? Well, I thought this was interesting, and some other people have reported this as well. But there's an app on Ethereum that's reporting nearly as much revenue as the chain of Ethereum itself right now, and at times more revenue. That's Uniswap, which obviously everyone knows. Uniswap is basically the heart and soul of DeFi trading within Ethereum. But that's just wild to think about. And imagine after, once they kind of fully implement some of these future promises for Ethereum, and the price, for gas goes down, I can only imagine how many more will outperform the chain itself, which I think is really the intent. The chain shouldn't. It should bring revenue in, but it shouldn't be nearly as expensive as it is.
Well, sorry, I did not get into the nitty gritty, but on a meta level, like, why is Ethereum valuable? To me, I've been thinking about this for a while. Like, why do some of these particular projects seem to, get up there and stay up there when ostensibly they're arguably could be like at least better projects in different dimensions? Now, I recently I've come up with this theory, and I think it is a very simple value proposition, along with like early adoption, of course. Like, just being first to the game pays off so much. Everyone's heard of Bitcoin, Ethereum, and they understand the value proposition. And I think the simplicity of the value proposition is where a lot of, in my opinion, I could be totally wrong here, the value comes from. Like Bitcoin, it's super simple. It is just trying to be money. Like, and how it goes about it, it's on top of that, it's trying to be the hardest, most conservative money. It's a 2-second elevator pitch, and it's easy to transmit, easy to understand, like what it's trying to do and its overall goal. Ethereum, similar spot. It's trying to be a world computer. It's a super simple value proposition that, big brain nerds can get, but anyone else can get it as well. Along you having a conversation with them on the side of the street. So that's my thought for why projects like Bitcoin or project like Ethereum that's part of the value proposition that other projects can take for granted when they're going to market their own project, is forgetting like the simple value proposition. That might be a big part of it.
Oh, it is, and I think the first mover advantage cannot be understated. It's massive. You look, for example, when you load up MetaMask, easily the most popular Web3 wallet in the space, when you load it up, what does it default to? It defaults to Ethereum. So that's everyone's first entry, first foray. When you go to buy an NFT, even though, and you and I were talking about this earlier today, there are healthy NFT markets in other chains, especially Solana and Tezos has some respectable NFT markets, but there is no doubting Ethereum is the king of NFTs. And so if you go to buy an NFT, you're going to default, you're probably going to go to OpenSea, you're going to go default to the Ethereum chain. You might play with Polygon because it's advertised there as like the gas-free or gasless or super cheap alternative, right? But you're keeping it within Ethereum, and it's going to take a lot to move that away, because that's also where all the liquidity is. Because of that, because of those other factors, there's just so much more money flowing around Ethereum, and in these kind of market conditions, liquidity is king. You got to go where the money is, especially if you're playing with big money. So, I have one note, and then we're going to jump into the Q&A. So Oz, if you see any good questions, man, start queuing those up. But just a fun note, Do Kwon, I really anyone that's part of Terra Labs, the Luna team, isn't allowed to leave Korea. So I made a meme like yesterday. It was a real video of this dude that was escaping from police. He spins his like Land Rover around backwards, taps into a pickup truck, or I'm sorry, like an 18-wheeler. He hits it, flips around over the wall and to the other side of the road, and then escapes. Right, and the cops can't get him because he just flipped his car over an entire wall. Wow. But anyways, I put Do Kwon escaping to the Seychelles or something like that. I guess I'm wrong. Yeah, he's probably stuck there now, man. So he's not going to have a good year. I really, I think that guy's going to be like the crypto Bernie Sanders, or not Bernie. Jesus, completely wrong guy.
That's a blast from the past. Yeah.
Yeah, no, Bernie Madoff.
Bernie Madoff. Yeah, there we go.
I know. Not too many Bernies in my head. Bernie Madoff, the guy that was like the king of Ponzi's, 10 years ago?
Well, I mean, he did socialize your wealth, so maybe the Sanders is applicable.
Yeah, with his rich buddies. Yeah. So, anyways, we'll keep tabs on it. We'll see what's going on. But man, I think between Korea and the U.S. government, the law of the land is going to be coming down on for Do Kwon and his friends at Terra Labs. So, Terra Labs. So, Terra Labs. So, Terra Labs. So, Terra Labs. So.